Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Mark Marex, Senior Index Specialist with Nasdaq Index Research. We're going to take a deep dive into the PHLX SOX Index, which of course covers the semiconductor sector. Mark, it's great to see you. Welcome to Trade Talks.
Great to see you too, Jill. Great to be back.
All right, let's take a look at the composition of this index and what makes it unique.
Yeah, so quick reminder for people, the methodology here is a modified market cap weighting process. We cap at 8% for the top 5 companies every quarter, at 4% for the rest of the index. We've got 30 names here, basically the top 30 largest names globally in the semiconductor industry. You can see on this first slide, it is fairly concentrated. We've got more than 60% of the index weight coming from those top 10 names. You can see those listed on the right-hand side. NVIDIA, currently the biggest one, followed by Texas Instruments, Broadcom, Qualcomm, and Intel, even though it's still technically the biggest component by revenue of all semiconductor companies globally. It's at number 5 in this index currently. And then on the next slide, we've got some additional kind of summary statistics, what the index looks like from a market cap bucketing standpoint. You can see for those bigger kind of mega cap firms, over 100 billion in market cap, little over 50% of the index weight coming from those. All the way on the right-hand side, you can see there's a bit of a global component here as well. US-based firms are 84% versus 16% coming from international firms like Taiwan Semiconductor, like NXP and ASML, a couple big names in the Netherlands. And then in the middle sector, you've got that new split from the ICB sector classification. So we've got a little over 3/4 of the index weight coming from kind of traditional semiconductor firms, and then the rest coming from some of those, equipment manufacturers, the companies that have been carved out and that actually produce the equipment that the semiconductor manufacturers use to then produce the semiconductor chips themselves.
And Mark, let's talk about performance, full year 2020 and what we've seen so far with 2021.
Yeah, so I think the amazing thing about this side-by-side view is you think about what happened in 2020, and yes, we were all work from home, play from home, shop from home, learn from home. Demand for semiconductors skyrocketed because all of a sudden you needed a lot more computers, tablets, gaming consoles too, for people who were stuck at home and needed to do more stuff from home. That kind of explains that leading performance story for SOX, up just over 51% last year, beating the NDX, the Nasdaq 100, by the way, by about 3.5 percentage points. That in of itself is quite a remarkable feat because that was such a strong year for the Nasdaq 100, and more than tripling the S&P 500 at about 16% there. This year, it's really more of the same. If you were expecting a bit of a cool off, which you can see there, the Nasdaq 100 is the worst performer out of these 4 here, up barely 13%. SOX is still the leader, up almost 19% year to date through yesterday's close on June 28th. And you can see still outpacing both the S&P 500 and even the kind of narrower tech sector only portion of the Nasdaq 100.
And Mark, I would imagine that translates to strong bottom line revenue as well.
Yeah, I mean, it's been a really, really solid fundamental story, top and bottom line. You can see on this next page, it's a view of the progression of revenue by sort of device usage over the last decade. And you can see areas like wireless communication more than doubled, automotive more than doubled. You've got, 1 or 2 areas here that haven't doubled in revenue, but still had really, really solid growth across the entire decade. And then again, had some of those really big shifts in 2020, as we saw that kind of push to digitize everything. And along with that, you've got, just really, really solid continuing demand for these semiconductor devices, which used to be a super cyclical sector with a lot of ups and downs. And now the view's kind of shifting towards, well, since so many different devices require them beyond just personal computers, you're going to see that more stable demand story continue into the future.
And Mark, when you look at assets under management, are you seeing an uptick there?
Yeah, I mean, it's a really, simple story, similar to the performance and the revenue numbers. You see that we were in the range of about 2 to 4 billion for a couple years before the pandemic hit in March of last year. Since those lows, we're up almost 400% in AUM terms for all the products that were tracking this index as of the end of May 2021. So really, I think solid vote of confidence by the investor community, signifying that, again, this was not a passing trend, not a passing fad or thematic that was going to cycle out as soon as we started getting out of the pandemic. We are still at or near record highs in AUM.
And Mark, to wrap up here, why is the semiconductor space such a good time for investors to be involved?
I mean, I think there's a lot of great sort of investor storylines, qualitative and quantitative. You've got the government in the US potentially stepping in. There's a Senate bill that was passed recently, making its way through the House. The president seems intent on signing and approving it. Almost $50 billion of government funding to assist semiconductor companies, mostly in that manufacturing space. Look, the government recognizes in the US as well as in the EU that it's an extremely important space from the supply side to get right. We can't have shortages ongoing forever. And for that reason, you're seeing things like, venture capital investment doubling year over year. And, leaders in that space saying 10 years ago, you couldn't do a hardware startup. Nowadays, you're seeing the demand there because the industry has matured into this new phase. You're seeing, the likes of Intel CEO, Pat Gelsinger, all the way on the right, saying we are setting a course for a new era of innovation and product leadership at Intel, and showing there the combined expected cap expenditure from both Intel and Taiwan, the two biggest players. We're talking, annual increases of $20 to $30 billion a year of capex, which is just extraordinary. So all in all, from the very bottom to the very top of the heap, I think in the industry, it's a great time to get involved. The SOXQ ticker for the Invesco ETF that launched in June tracks this index and gives you the best access to what we think is the industry benchmark for the space.
All right, Mark, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.